Alright friends, you would have finished writing this whole thing. Let us now move ahead and take some important questions which will clarify application of these concepts. So let us first take up question number 6. Let us read this question. Question number 6 comprises of two different scenarios, scenario A and B. So let us first deal with scenario A. An electronic data storage provider, that is supplier, provides services through a centralized data center that involve use of a specified server, that is mentioned as server number 10. The supplier maintains many identical servers in a single accessible location and determines at inception of the contract that it is permitted to and can easily substitute another server without the customer's consent throughout the period of use. So if we try to interpret the information given within this part of the question, we can say that the supplier maintains many identical servers in a single accessible location, and at inception of the contract it is permitted to and can easily substitute another server without customer's consent throughout the period of use. Now this itself is an important information which is enough for us to identify that there is substantive substitution right in the hands of the supplier, and therefore the asset is not identified for the purpose of lease. Now the question given in scenario A doesn't end over here. Let us read further what is given. The question further informs that the supplier would benefit economically from substituting an alternative asset because doing this would allow the supplier to optimize the performance of its network at only a nominal cost. In addition, supplier has made clear that it has negotiated the right of substitution as an important right in the arrangement, and the substitution right affected the pricing of the arrangement. Whether substitution rights are substantive and whether there is an identified asset is the question. Now two things are clear in the question. Number one, the supplier has substantive substitution right to substitute the asset without taking the consent from the customer. That is number one thing. And number two, that the supplier would be benefited economically by substitution. As a result, we can say that there is presence of substantive substitution right definitely, and therefore we will not call this asset as an identified asset from the viewpoint of lease. So let us see how to present the answer for this scenario A. We will first write up the answer for scenario A and then we will take up scenario B. So the answer for scenario A would be: the customer does not have the right to use an identified asset because at the inception of the contract, the supplier has practical ability to substitute the server and would benefit economically from such a substitution. Thus, there is no identified asset. So do one thing friends, write up the answer for scenario A and then we proceed with scenario B. Alright friends, I am sure you would have finished writing this answer for scenario A. Let us read what is given in the question with respect to scenario B. It is informed in scenario B that assume the same facts as in scenario A, except that server number 10 is customized and the supplier does not have the practical ability to substitute the customized asset throughout the period of use. Now this line itself is so clear that there is no substantive substitution rights in the hands of the supplier. Now further given, additionally it is unclear whether the supplier would benefit economically from sourcing a similar alternative asset. But if you can see, as per the condition given in the standard, this second line, whether we are clear or unclear, it does not matter. To the extent what we know for sure is that supplier does not have practical ability to substitute itself is a big thing to clarify that there are no substitution rights in the hands of the supplier. So the question at the end is asking whether substitution rights are substantive and whether there is an identified asset. We would write the answer as there are no substantive substitution rights. Secondly, there is definitely an identified asset because the asset has been mainly customized or designed for the customer. So let us see how to write up the answer. As your answer for scenario B, you would write the substitution right is not substantive and server number 10 would be an identified asset because the supplier does not have practical ability to substitute the asset and there is no evidence of economic benefit to the supplier for substituting the asset. In this case, neither of the conditions of a substitution right is met. Therefore, server number 10 will be considered as an identified asset. So do one thing friends, quickly write down this answer and then we move ahead. That's quite a lot of discussion about identified asset, but let me tell you, we are not yet done with it. We have yet to discuss something more on identified assets. As per Ind AS 116, an identified asset needs to be physically distinct, and for being physically distinct, it can be either an entire asset or it can even be a portion of the asset. But that portion of the asset should be capable of operating on its own independently. For example, suppose someone takes an entire commercial building under lease. That entire commercial building is definitely physically distinct asset. However, I need just one floor in that commercial building. So I would want to just have that one floor of that building under lease. So I have taken one floor of that building under lease, and that one floor can still be considered as an identified asset. It is physically distinct asset because though it is not the entire building, but it is a portion of the building, but which can be considered as physically distinct. You can consider that as an independent unit in that whole building. In big cities, when you have commercial complexes or commercial buildings, forget about entire building or entire floor. Each floor in that commercial building will be having multiple office spaces identified as small office units. I may take just a small office unit, right? Even that can be considered as an identified asset. So friends, it is very important in terms of this physically distinct point that you should understand that the asset may be a separate entire asset or it can be a portion of the asset. Either way, it can be considered as an identified asset if on its own it is functionable. So let us write up the point that we have discussed, that identified asset physically distinct. An identified asset must be physically distinct. A physically distinct asset may be an entire asset or a portion of an asset. For example, a building is generally considered physically distinct, but one floor within the building may also be considered physically distinct if it can be used independent of the other floors. So friends, take note of these points. I have already explained the same. So friends, with respect to whether an asset is physically distinct or not, to apply the judgment of an identified asset, there can be two possibilities. The entire asset is a subject matter of lease or only a portion is a subject matter of lease. If the entire asset is a subject matter of lease, there is no confusion. then we can say that the asset is physically distinct, and the moment the asset is physically distinct, other conditions taken care, the asset will become identified asset, no doubts. Now, what if the asset is not the entire asset, only a portion of the asset is considered under the contract? Then you have to be little more careful while dealing with a portion of an asset. So if there is only a portion of the asset involved, then make sure that the customer has practical capacity to use the asset for substantially all of its economic benefits. For example, if I have a need of some office space, I approach an office owner, that means a property owner, and ask that person that please give me some office space. I am a chartered accountant, I would want to establish my practice and I would just need one small office space. He is showing me his own office and asking me whether it is fine. I said yes, this is the kind of office I am looking for. Now the supplier says okay fine, this is my office but you can also use it. You pay me so much of rental and you also use it, but you cannot use it for the entire time. Part of the time I will use, part of the time you use. Now there is a problem. Now with that asset, here I do not have substantially all economic benefits derived out of that, and that cannot make the asset as a physically distinct asset. If there is no physically distinct asset, there is no identified asset, and if there is no identified asset, there is no lease. So friends, you should understand this point very well, particularly when the subject matter of the lease contract is not the entire asset but a portion of the asset. In that case, it can still be considered as physically distinct and become identified asset, provided the lessee or the customer should be capable of deriving all economic benefits or substantially all economic benefits out of that. Some illustrative examples in this regard will definitely help you out. So let us write up the point that we have just discussed. A capacity or other portion of an asset that is not physically distinct. For example, a capacity portion of a fiber optic cable is not an identified asset unless it represents substantially all of the capacity of asset and thereby provides the customer with the right to obtain substantially all of the economic benefits from use of the asset. So friends, as I am repeatedly mentioning one thing, if it is not the entire asset but a portion of the asset, at least that portion should be capable of providing substantially all of the economic benefits from use of the asset. So write up this point quickly and then we shall move ahead. Alright friends, you would have finished writing this whole thing. So let us now move ahead and apply these concepts in some questions, and let us begin with question number 7. So question number 7 reads like this: Customer XYZ enters into a 5-year contract with supplier ABC for the right to use 5 fibres within a fiber optic cable between Mumbai and Pune. The contract identifies 5 of the cable's 25 fibres for use by company XYZ. So now just by reading this much, it is clear that which 5 fibres are included in the contract out of total 25 fibres forming part of the cable. Now the cable as a whole is not included in the contract, but 5 out of the 25 fibres are definitely included, and these fibres are already identified. Further given, the 5 fibres are dedicated solely to customer XYZ's data for the duration of the contract term. So this second line further clarifies that the leased asset is completely dedicated to the customer. That means the identified asset, those 5 fibres are completely dedicated to customer XYZ. Further, assume that supplier ABC does not have substantive substitution right. Now this is the assumption specifically required in the question. So the moment you assume that there is no substantive substitution right, immediately you can patch up that line and conclude that the asset given in the case is definitely an identified asset. So the question is asking you in the last line whether there is an identified asset. Yes, there is definitely an identified asset. So look into how the answer should be presented. Yes, the said 5 fibers are identified assets because they are physically distinct and explicitly specified in the contract. And if you want, you may add up that one more line, that there is no substantive substitution right held by the supplier. So write up this much quickly and that will be end of the answer. Alright friends, you would have finished writing this answer. Let us move ahead and now take up the next question, that is question number 8. Let us read this question, which is given in two different scenarios, scenario A and scenario B. Customer XYZ enters into a 10-year contract with supplier ABC for the right to transport oil from India to Bangladesh through supplier ABC's pipeline. The contract provides that customer XYZ will have right to use 95% of the pipeline's capacity throughout the term of the arrangement, whether there is an identified asset. That is the scenario A question. In scenario B, they are saying assume the same facts as in scenario A, except that customer XYZ has right to use 65% of pipeline's capacity throughout the term of the arrangement, whether there is an identified asset. So what we can understand in this given situation, that in scenario A, after dedicating 95% of the capacity to the customer, obviously there will be no substantial benefit that supplier can obtain out of that remaining 5% capacity. So in that case, we can say that the asset is substantially included in the contract, because 95% can be considered as substantially the whole asset is included in the contract, of course for the lease term. On the other side, in scenario B, only 65% of the capacity is dedicated to the customer, and 35% which remains can provide separate economic benefit to the supplier, correct? And that is why the use of capacity for the customer has been restricted only to 65%. In such case, we cannot say that substantially all economic benefit of the asset will be derived by the customer. So in the second scenario, that is scenario B, we can conclude that there is no identified asset because the conditions of substantial economic benefit is not getting fulfilled in this case. So let us see how to write up the answers for both these scenarios. First, let us write the answer for scenario A. We can say yes, the capacity portion of the pipeline is an identified asset, and the reason can be written as, while 95% of pipeline's capacity is not physically distinct from the remaining capacity of the pipeline, it represents substantially all of the capacity of the entire pipeline and thereby provides customer XYZ with the right to obtain substantially all of the economic benefits from use of the pipeline. So friends, do one thing, write this quickly and then I shall take you ahead. Alright friends, you would have finished writing the answer for scenario A. Let us now write up the answer for scenario B. In scenario B, you would say no, the capacity portion of pipeline is not an identified asset, and the reason what you can specify is, since 65% of the pipeline's capacity is less than substantially all of the capacity of the pipeline, customer XYZ does not have right to obtain substantially all of the economic benefits from the use of the pipeline. So that will be the concluded line. So please write up this as well, and that will be end of the answer. So friends, that was discussion about identified asset. Going back to the definition of the lease, lease means what? A contract that conveys right to control an identified asset for a specified period of time for some consideration. So, if you plot each element of this definition separately, one aspect of that definition, a very important aspect, was identified asset. We have discussed everything about identified asset. Now, there has to be conveying the right to control, means the lease contract should convey the right to control that identified asset, and this has to be conveyed from whom to whom? Obviously from the supplier to the customer. That means a lease contract should convey the right to control the use of the asset, and the supplier has to convey that right to the customer. Whether customer has the right to control or not has now become a question mark. How would you answer whether the customer has right to control or not? Just first take an example. Suppose I want a truck to be used for 3 years. I approach a transport company and they have given me an identified asset, a specific asset. We can say an explicitly mentioned asset in the contract, and I can use that for 3 years. So, first of all, the asset is identified asset, no doubts. Now, just identified asset is not enough. I should have right to control the use of the asset. For this purpose, as a customer, I need to fulfill two conditions. Number one, during the lease term of 3 years, it is me who should be getting all the economic benefits arising from the use of the asset. Supplier of the asset will get lease payments from the customer. Whatever I pay as rentals or lease payments, that is the only economic benefit that the supplier should get. On the other side, the customer needs to get all or substantially all economic benefits from use of the asset. That is one thing. Second thing, it is the customer who should be capable of directing the use of the asset. How the asset should be used, when the asset should be used, where the asset should be used, these decisions can be taken by the customer. If the customer is capable of fulfilling both of these conditions, then we can say that customer has the right to control. So friends, there is a lot to be discussed with respect to right to control, and let us discuss this whole thing one by one, and we will write up all these important points.